Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES failed at the 84.5 to 86.5 overnight resistance and then continued to push lower and test lower prices. At this point, heading into the open, we know that the sell side has been dominant in the overnight session, but our overall bias continues to be neutral in this market because we are still seeing responsive buyers active at support. And if you zoom out and really look at the bigger picture, this is simply a pullback after a very strong move up. So over the last few days, ES moved up from 1981.5 all the way up to the 2004 to 5 area. So this can simply be viewed as a pullback off of a larger time frame area of resistance and a very overbought state. So as the market tests these areas of support, we can still get buyers active. And that's why we can't really head into the day with a overly bearish short-term bias despite the overnight session being quite bearish. So our short-term bias continues to be neutral. We are still going to be open to long and short setups off the open. Keep an eye on 66.5 to 68.5 pre-market support. Holding above that area tells us that the buy side is active. And then on the upside, if we can break out above 73.25 to 75.25, that would provide a short-term confirmation that buyers are really stepping in. And in between the pre-market support and pre-market resistance, ES could simply balance. So we have to see how the market resolves outside of that range. So whether it breaks out above pre-market resistance or breaks down below pre-market support. In the event of a break below 66.5, we have support at 61 to 63, followed by 54 to 56.5, and then we have stronger support at 46 to 49. Now the 61 to 63 area is going to call for some caution where it's a real-time discretionary decision. So it's not an automatic long. It's something where we have to see how the market is approaching that zone, the level of weakness we're seeing in real time. Keep an eye on the other markets as well. And it's still an area where responsive buyers can be active, but if the market continues to balance here, let's say for another couple of hours, and then breaks down on heavy downside momentum and broad market weakness, then we could go through 61, 63. It's not such a strong zone that it absolutely has to hold. 54 to 56.5, of course, provides better location on the long side, and the expectation is for buyers to be active there on first test, and the same goes for the 46 to 49 zone. So those are stronger areas of support, and in the event that we get down there, those are good spots to look for some responses and reactions from buyers. On the upside, a breakout above 73.25, 75.25 would bring the 79 to 80 area into play with the previous VPOC and a larger time frame high volume node at 2079. That's an area where sell side could be active. Again, we're going to have to see how it approaches it, how the day is developing in real time. And then beyond that, we have the gap fill, and then the bigger area of resistance, at least short term, is 85 to 88. So that is the bigger area that would need to be taken out in order for the buyers to really come back into control. And from there, we can go up and hit the 95.25, 96.25. So you really have to take it step by step. In this environment where we are running on higher volatility, higher volume, and we're seeing wider ranges on the day time frame, it's inevitable that a few of these zones are going to give way, right? If we're going to print a 25 or 30 point day session range, then obviously we are going to violate some of these zones. And that's why, we have to be very active in real time. We have to be assessing the market situation in real time and adapt accordingly and see, kind of the level of weakness or strength that's developing, the level of momentum in the market. That's going to be very key. It has been key ever since we got this volatility spike. We're in a high momentum, high volatility market, so we have to be very much in tune with the underlying momentum situation. And if you are going against the momentum, then you have to secure good trade location. So that is a relationship that you absolutely have to keep in mind. Anytime you are going counter to the immediate momentum, you want to secure good location. And if you are going with momentum, then you can sacrifice trade location a bit. And that single rule can actually keep you out of a lot of mediocre trades, or at least get you in at the right time, even when you are taking a trade that is very much against the immediate momentum in the market. So those are some thoughts to keep in mind. Those are the main ideas heading into the open. Again, short-term bias neutral, overnight bias bearish, open to a move on either side. We could go down, test support, and then bounce up. And if we hold pre-market support, then we could quite easily just go right back up into the 79 to 80 and 85 to 88. So those are the main ideas. Let's see which side really takes over off the open here. Let's stay flexible, and we'll take it from there.